data from the National Bureau of Statistics shows that Nigeria's headline inflation rate dropped 0.38% lower to 16.63% year-on-year for the month of September. Meanwhile, the naira depreciated by 165 basis points to 422 naira to the greenback at the investor and exporter FX window on Thursday. Chuka Nwachukwu, the head of bonds trading at UBA, joins me now to discuss the activities impacting the fixed income and FX markets today. Thank you for your time today, Chika. Let's first start with what we're seeing play out with inflation. What's your take on the numbers?
Okay, thank you. And the numbers are pretty good. The forecast was actually 16.5, sorry, the forecast was actually 16.65. And then it came out slightly lower than that. So it's a good development. It's a good thing. Though, if you look at the parameters, some of the core pictures there still hasn't dropped as low as the core one.
All right, but on food inflation, though, did that also meet your expectations?
Yeah, somewhat, yeah. Though, you know, I mean, if you ask an average man in the market, I mean, on the street, he tell you that, look, nothing has changed. But gradually it's coming down, and then, of course, you know, some of these things take over time to manifest, you know. So the way you see it in the real market is not the same way, you know, it comes out in terms of the statistics.
All right, now looking at the currency, though, we saw that drop yesterday by 1.6%. For you, though, what's playing out there, and what's your outlook for the naira going into next week?
Okay, well, the currency, you know, depreciated. We saw yesterday about 420, pardon me, levels. So, yeah, isn't what we want, it is not the level which the CBN will want it to be, but I think that going forward, they take that into consideration, and then probably, you know, flowing more dollars into the system, and then we see the rate moderate slightly.
All right, now, but looking at what we saw play out in the primary market auction this week, how is that impacting market sentiment today?
All right, thank you. This week we had the primary market. Market generally was mute first 2 days, which is expected because of everybody was just waiting for the primary market. So against all expectation, again, we saw that the rate drop, you know, from 7.5 to 7.25. That's about 25 basis points. You know, this is what some people expected, but then, you know, it is an indication that the DMO is looking to, you know, to keep this rate as moderate as they can, and also to ensure that they borrow as low as they can. You know, if you look also at the reaction, you know, we saw muted trading activity, like I said, the first 2 days, but then after the auction, we saw that there was a lot of bearish sentiment, because those who didn't win at the auction actually came into the secondary market to fill up their demands. So let me quickly run you through the statistics. So 121 billion was on offer, about well over 490 billion was subscribed, and then this DMO sold about 187. So, I mean, the subscription will give you idea of the huge demand there is in the market out there.
All right, now, but looking at liquidity, I'd like to get what your expectations are going into next week, and also your take on the dollar supply.
Okay, on the liquidity side, we want to look at it from this angle. One, we have about 192 billion worth of coupon payments this month, starting on the 18th to about 27. You know, that, of course, will bring in more liquidity into the system. Now, the system hasn't been too tight, neither has it been too liquid. So this coupon payment will actually, you know, help to ease the liquidity issue we have. Then, you know, your second question, which has to do with my take on the naira. I feel that the naira will remain within this parameter of, say, 415 to 420, I mean, within the next 2-3 months. So I don't see anything significantly changing from it.
All right, but finally, before I let you go, looking into next week, though, what's the most significant thing you're expecting to happen next week in the market?
Brilliant. So next week, we have a bond auction next week. Recall that the bond calendar came out last week or last 2 weeks. So we have 3 maturities on offer. 2026 was replaced, 2028 was replaced with 2026, and then 2036 replaced with 2037, and then the 2050 remain the same. So, I expect that's the major highlight for next week. And unlike before, the bond market has actually resisted the drop in rate at the NTB. So we expect that the yields will continue to go up on the bond side, considering the fact that there's a 6 trillion deficit on the budget. And so this indicates that a lot of borrowing will be done going into the 2022. And then within the next few months to the end of the year, we expect to see the yields slightly inch up on the bond side, but on the T-bill side, we expect the yield to settle within these levels.